Holy crap. Today in the stock market is another wild one. We were up in the beginning of the day. Things were looking okay. Now we're down about 1.5% on the S&P 500, down over 2% on the NASDAQ. Let's talk about what happened and what is really causing this move today, and also go over the data behind AMC that you want to know. At the time of recording this video, AMC is up 0.5%, so that in and of itself is a very positive thing in my personal opinion. So let's get straight into all of this information. First things first, guys, as you know, there were bank earnings this morning, and bank earnings overall were not bad. JP Morgan actually did pretty good. More specifically, that's the biggest bank with total assets under management. And you guys can see that this article says JP Morgan Chase tops estimates as bank reaps more interest income than expected after jump in rates. The revenue beat by over $1 billion. Their revenue was $33.49 billion versus $32.1 billion for the estimate. It says the earnings were $3.12 per share, and the estimate was $2.88. And banks, by and large, are doing decent today. And you also have Jamie Dimon, which is the CEO of JP Morgan, saying to expect other surprises from choppy markets after UK pensions nearly imploded. And that's a big story of today. The bond yields are actually heading down by and large. And what that actually means is that bond investors are really going out there and starting to buy bonds a little bit more here today. So nonetheless, you know, that can be seen as a positive thing over in the UK, all of that. So what's actually happening today, guys? The biggest thing from what I can tell is the dollar. The dollar is up over 0.5%. That's a very big move on the dollar. Even yesterday, the dollar was down about 0.66%. And when the dollar falls, it's usually a bullish thing for the markets, especially when the dollar has been strengthening so much over the past year as the Fed has continued to raise rates, so on and so forth, to really restrict the money supply, or at least try to restrict the money supply. We've been on this parabolic rally with the dollar. So anytime the dollar is up 0.5% in a day, that's usually going to mean the stock market's going to be down a couple percentage points. If the dollar is down in any given day, usually going to mean the stock market has room to rip. And that's exactly what happened today, and that is exactly the correlation that we have been seeing over the last couple of days. Now, something else that I think is key: consumer spending was flat in September and below expectations as inflation takes a toll. The key points: retail and food services sales in total were little change in September against the estimate for a 0.3% gain. Excluding autos, sales rose 0.1% versus the estimate for spending to be unchanged. The numbers are not adjusted for inflation, indicating that consumer spending slowed. So all in all, the adjusted numbers, this should be a positive thing because that's what the Fed wants. The Fed wants less spending. The Fed wants 1.5 million people to lose their jobs, hopefully, to get inflation down. That's literally what the Fed wants, 4.5% inflation. That means 1.5 million people from these current levels will have to lose their jobs. So it doesn't make a whole lot of sense why this is not seen as good news, because in this marketplace where bad news is good news is bad news, seems like that should have been good news. But on top of that, and on top of the dollar and the dollar strengthening today, meaning the dollar going up, stocks going down, the normal correlation we have seen throughout 2022 and over the last couple of months, what you're also seeing today, in my personal opinion, is the lack of a short squeeze. We were really seeing a short squeeze yesterday. The buyers started to step in when the markets were down 2.5%. Once you get to a certain point, you will start to see margin calls and things like that, and people will start to cover on their short positions, especially when so much of the markets are weighted towards the downside. You have hedge funds with like very little long exposure as of right now. And when that happens, and when you get buying activity, you can see pretty big rallies. And I think this is really a continuation effect of the CPI report. And based off of the move we seen yesterday, the move we seen today, you're almost at a break even for the CPI, which is very strange. Usually we pick one direction or the other and continue down that path for the next following couple of days or next couple of weeks. Nonetheless, you are going to have earnings for next week, and that is really the big X factor here. And I think that's going to be the next most important thing, at least until we get to the midterms, which is going to be mid to late next month. So we still have about a month away, and Fed Jerome Powell, which comes November 2nd, still a couple weeks away. The big question is going to be earnings. If earnings are decent, they don't even have to be good at this point. Analysts have started to revise down their estimates. So as long as they're decent, I think that could really be a bullish thing for the markets and potentially send us on a rally, because after all, what are the only things that really matter in investing? It's fundamental valuation. So if companies can come out and say, hey, essentially our earnings are good, we're not slowing down, revenue is still okay, well, that justifiably should mean a higher valuation, or at least a valuation reset, and potentially could mean a rally at the same time if earnings are really bad. Like, when I say really bad, they would have to be like really, really bad, like a Facebook or Netflix event that happened earlier in 2022 to happen with Apple or Microsoft or Google. If those things happen, well, you're in for a major crash. Right now, it doesn't look that likely. Then again, I've been wrong before on earnings. So maybe this is the quarter that we see weakness in the markets, and you actually see companies that are starting to reflect that the consumer is slowing down. And we'll see which companies that is. I'm sure there'll be a couple this earnings season, but that's really going to be the big X factor as of right now. And the thing that I really can't predict for you guys, I it's very hard to say which companies are going to do well, which companies are not. And all in all, I think it's probably going to be a really big mixed bag. I think you're going to have some good, some bad. But nonetheless, the markets are going to choose a direction off of earnings, in my personal opinion. Now, for next week, as far as economic data, you don't have anything for Monday. For Tuesday, you have capacity utilization for September coming out at 9:15 in the morning. Industrial production year over year and month over month as well, coming out at 9:30 in the morning. But that's basically it for Tuesday. For Wednesday, you have mortgage applications, building starts for September, and building permits for September. But that's really it as well. Thursday, you have existing home sales for September, initial jobless claims, Philadelphia Fed. Those can be important, but probably not too much. You do have Fed Cook that speaks at 1:45 p.m., Fed Jefferson that speaks at 1:30 p.m., and some bond auctions on Thursday. But that's really it. And then on Friday, you don't have anything besides Fed Williams that speaks at 9:10 in the morning. So you're heading into this Fed blackout period. And a lot of our data that we're going to get before that November 2nd meeting has already been, portrayed and has already been let out, right? We already know a lot of the data, the CPI report, the retail sales, like consumer expectation surveys. There's not too much left. So I think the biggest thing as of right now, like I said, is going to be earnings, because there's no data that's really going to come in and save the day or anything like that coming over the next week or two. Now, as far as market expectations, we are firmly expecting a 75 basis point rate hike. 98.4% of market participants are expecting that 75 basis point rate hike. So not too much has actually changed here, but there's 1.6% of market participants that are expecting a 50 basis point rate hike compared to the other day. In which about 2% of the markets were expecting a 1% rate hike. So it's kind of, gotten even a little bit more bullish today. People are not pricing in a 1% rate hike at all. They're starting to price in a 50 basis point rate hike. We'll see what happens. If company earnings are really bad, that could definitely move things around, and that's something to pay attention to. But I'm not convinced of anything at this current moment. Obviously, right? CPI yesterday showed you that. You shouldn't have a conviction as of right now. The only thing I know is that in the long term, if you're buying stocks now, I'm almost 100% certain the next couple years down the line, you're going to be very happy that you were buying the dip. That's literally the only thing that's certain. Yesterday, we should have sold off 5% in the markets. CPI was terrible. Nothing was good. And the markets ripped. And now today they're crashing, right? So hold your convictions, and I wouldn't, like I said, be too convicted on any which way as of right now. But as far as AMC stock, cost to borrow max sitting at 29.22%, cost to borrow minimum at 21.38%, and cost to borrow average at 26.67%. At the same time, the short interest of free float is sitting at 18.95%. And essentially what you've seen today as far as the option activity is about 1% positive order value. You have seen 5 orders totaling $2 million, positive order value of 1%. So hedge funds doesn't look like they're going to let off the gas anytime soon. It doesn't look like, they're getting more bullish on AMC by any means. Still very low option activity for AMC. On a good note, though, on a technical basis, you hit a oversold level on the RSI, one we have not been at since at least late September or mid-September, I should say, so almost a month ago now. And that's where you bounced last time, just a brief bounce, and you're starting to get that bounce again. And we did hit a new low for 2022 just yesterday. So if we can, get a bounce off that low, which you typically do once you hit a new yearly low, that's going to be a good thing, at least here in the short term. And the fact that the NASDAQ is down 2%, AMC is up 0.5%, that's something I can say is bullish. There's not a lot of things that for certain in this marketplace. Things are wonky, things are weird, but when AMC is positive 0.5% and the NASDAQ is down 2%, that is a positive thing. If we can get a bullish reaction next week, I think AMC stock might be able to well outperform the markets. And on top of that, the MACD is very bearish as well. So guys, that's pretty much going to be all for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.